Hi everyone, let's do a quick check on the market midweek. A lot of traders these days are feeling a little bit bad about being confused. Well, if it makes you feel any better, the huge hedge funds are also confused and losing money. For example, JP Morgan is buried upside down in a hedge trade that they had, and the market is just crushing them. So if JP Morgan can get hurt, don't feel bad about being a little bit confused. Let's put some clarity about this week. We just had a CPI report which caused a little bit of buying here and there, and today the scoreboard was somewhat mixed and we had a pretty strange dip middle of the day. But here we are. I'm here to tell you that we're not that confused. This was the chart I delivered this morning before the day started. So that's what happened today. This line was here before the day started. That was my target. Look at where we went at the low of the day. We bounced off of it. But this is to say that we knew there were going to be chops, and we knew the potential was to the downside, and we even measured it correctly. This is not a one-off. Here we are looking at the SPY version of it. Again, these lines were here before the market opened. This was today. This was the low of the day, and this was our target. If I switch to the NASDAQ, again, I was looking down, and they're fighting over an area that has been in contention for just under a month. If you focus on the lines on the chart that we are doing for our little group, it takes away the emotional aspect, the confusion and the anger if you're bearish, the overconfidence if you're bullish, and it just reduces the decisions to here's a line, here's another line, and if we cross this one, this is where we're going to go. What's next is, so we are stuck, and this market is now addicted to headlines. They're making up headlines out of nothing. Today we had two giant moves in the middle of the day, and they seem to be in reaction to bond auctions. Since when do we do that? And the funny part is, the second one didn't cause a blip in the bond prices, but the stock market went bonkers. Those who are tracking levels and targets have a better understanding on what to do. For example, I've been focused on more trading than investing. We are at all-time highs. I don't want to put a penny in here and get stuck. And if I find a cheap stock I want to buy, I'll buy a piece, a small piece, so I can double it and double the double at least. And the trading is easier if we watch lines. I would focus on the QQQ. The markets are not going anywhere without the mega caps. So for tomorrow morning, we do have a PPI coming up before the market opens. Yep, my observation is that in recent history, what they're doing is they're waiting for the report to come out. And if it's not horrible, they're rallying in relief afterwards that, hey, the report is behind us. We'll see. I'm not one to trade headlines, but I will take advantage of the moves on headlines that I think are silly.